We're going to now introduce a panel that will deal specifically with Insurtech in the insurance industry space. It's really a pleasure to be able to introduce our panel members. So I'm going to have, from my direction here on the left, introduce Dennis Monaghan. Dennis has the pleasure of being with Munich Re's Digital Partners and is at the inception or at the evolution of confluence of where you're dealing with insurance and Insurtech and startups, and I can't imagine what his life's like of having to deal with all the tech guys and trying to deal with the insurance guys and trying to throw it all together. Let Dennis give a little bit more about his background, but it's fascinating. And then I've got Joe Bauer and Matt Heffernan, both with Swivyl, and they will come from the concept of how they're looking to change down improvements to the distribution channel using technology that would really help improve the way insurance is done. And as I got to talk to a number of individuals, it's really fascinating for me to be able to really get the concept of people's minds and think of all the possibilities there really are to improve, not just from a disruptive point of view, but frankly just from the traditional insurance side of ways that we can do things better. We can have better experiences, whether it's on the consumer side, as we were talking earlier, but even from the commercial side, when you deal with risk managers and others. And I think they'll have really a lot of input to give us some thought. And then I've got Kyler Nunery, who is with myCOI, and from the same kind of perspective of, if any of you all have dealt with management of a certificate of insurance and know about the absolute confusion of getting certificates issued and making sure they're there, they got the right names, and it is a nightmare even for those of us who understand the process of what you go through, and any improvement would be very much welcome. So with that, Dennis.
Good morning everyone. First let me start by thanking Frost Brown. This is a really beautiful event and a fantastic venue, so thank you very much for that. I appreciate the invitation. It's really a pleasure to be here. Again, my name is Dennis Monaghan. I'm with Munich Re Digital Partners. Many of you are familiar with Munich Re, large global reinsurance company. They also have a large presence in the United States. Companies like American Modern Insurance Group and Munich Re America have a very large visible presence here. Hartford, Steven Boiler, and others. At some point, seeing, really about 2 years ago, taking a look at Insurtech, taking a look at digital innovation, Munich Re looked at that and decided that it would be a good idea to figure out, not knowing what's going to happen, how can we be part of the solution, how can we be part of the future, how can we make things happen. And to be clear, there's a lot of great things going on within other Munich organizations, but they made a very strategic decision, which was to create a very small unit dedicated to nothing but digital innovation. And we are not in Indiana, and we are not in Kentucky, but we are in Cincinnati, which is pretty much right in the middle of the boat.
All right, I should have mentioned Cincinnati.
Great insurance community, absolutely. So I'm here today to speak for Munich Re Digital Partners and the things that we're doing. Glad to be here. Thank you.
Hi, everybody. My name is Joe Bauer. My co-founder, right here next to me, Matt Heffernan. We founded a company called Swivyl last year. Matt and I met while we were working previously for a corporate insurance consultancy, a boutique consultancy here in Indianapolis. And he and I kind of spearheaded the team that handled a lot of our property and casualty clientele. So we shared a lot of accounts together, and what sort of caused us the spark that caused this idea that we came up with was one shared client that really was having a particularly difficult time staying organized when it came to effective management of their insurable assets. Namely, after we were reviewing their entire risk profile in advance of their insurance renewal, we discovered that they had a truck that had been on the road for 6-9 months, something like that, that the insurance carrier was not aware even existed. So they had been assuming 100% of the risk of having this truck on the road. In addition to that, we also discovered that they had 3 or 4 trucks that were still on their auto schedule that they had sold out years prior. So they were paying premiums on assets that they didn't even own anymore. So kind of evaluating the situation and then talking to some of our broker friends and discovering that this is not an isolated incident, this is not a freak occurrence, these sorts of things happen all the time. We thought there's definitely got to be a better way to do this, so what can we do to kind of replace the old Excel spreadsheet system for managing assets and try to create a cloud-based and online system where we can put all of the eyeballs on all of the same information at the same time to try to eliminate any possibility of these things happening in the future. So that's kind of our goal and how we fit into the Insurtech space. I'm sure we're going to talk in a little bit further detail about, what exactly is meant by Insurtech, whether it's, I mean, we touched on briefly during the regulatory talk about Internet of Things, one huge aspect of it. We're really more on the data side and also in the enablement side, not the disruptive side of things. And Matt maybe can share a little bit more about how the technology works.
Sure. I spent about 10 years in the corporate insurance industry, which doesn't seem like a long time until you have delivered enough policies and sifted through enough documents that you realize that is a world that is very much needing of change. And so the biggest disconnect that I always saw as an advisor was really my role as an advisor. I always felt was very reactive and playing a lot of catch up. And so we're really looking to enable the broker and commercial consumer in a more collaborative way so that they can have more meaningful time that they spend annually or anything that's being done is productive use of time. And really our platform will solve that through just an accountability system where, frankly, the end user becomes a better steward because they have the data readily available to them to provide to their partners, their broker partners. And the brokers will like it because they will spend less time adjudicating errors and more time talking about planning and risk tolerance. So we're really excited about what the future holds there. And carriers, I hope, will really like it as well because they're going to have access to live data on their insurance.
Kyler?
Yeah, so, excuse me. My name is Kyler Nunery, and I'm getting over a cold, so sorry for anyone whose hands I already shook. So I work for myCOI. We're a company that was actually started by my sister about 9 years ago. We track certificates of insurance, and we're really about managing our clients' risk. So the elevator pitch that I give to a less educated audience, but is if a building like this works with lots of vendors and tenants and they sign contracts with them, they have insurance requirements, the industry average is that 30% of those vendors are not compliant with those requirements. So, and it's also a big paper chase to try and track down the proper certs and endorsements and exclusions, et cetera. So we've built a SaaS platform that helps manage that process, and then we also have a services side to our business. So the services side is people that are going in and reviewing the contracts, doing lease abstraction, and chasing down the certs and reviewing those to make sure they have waiver of subrogation, additional insured names, all these other things, details that all those are squared away, so that basically banker's life is not at risk. And I want to say that my background is not in insurance. I've been in insurance about a year. I come from a technology background primarily, so excuse me, and specifically AI, machine learning, and sort of some of the newer technologies. So I'm excited to be here to talk today, but I'm actually most excited about some of the conversations that might come up after this because I'm an entrepreneur at heart. I have an eye towards using technology in new and creative ways, but I don't know as much about the challenges in the insurance industry. So I would look forward to some conversations with you all where I can represent some machine learning and blockchain, such things like that, and have some interesting dialogue.
Thank you. So listening to the legislative panel earlier and the discussion about a sandbox for laboratory, and with the element of regulation in the U.S., what's your definition of what that would mean or how it might help? Dennis, I mean, you get to see it from not just U.S. perspective, but Munich obviously is in some of the places where they've created some sandboxes or laboratories. What do you think?
It's a big question.
Yeah.
It touches on a lot of issues. I think, first of all, I'd like to maybe reframe the way we're talking about this as not necessarily a dispute between regulation and non-regulation. Speaking on behalf of, we have a variety of partners who are trying to create new opportunities in the Insurtech space. And I would say, at their core, to be successful, they have the same mission, the same objective as the regulators, which is serving the consumer. Ultimately, we're all looking to serve the consumer. That's going to drive product success, and it's also going to drive protections. So, in terms of the sandbox generally, I will tell you, we are headquartered, our North American operations in Cincinnati, but our headquarters is out of London. And trying to explain the U.S. regulatory environment and the way it's laid out to Europeans is quite a challenge. I actually had them in town. I took a U.S. map, and every single one had a different country's name instead of a state based upon a similar population. And I said, this is really how you have to view the United States. It's not one country. It's like 50 different countries. So when we talk about the regulatory burden, it's not necessarily entirely about unreasonable regulations or difficulties or challenges. The very system itself is extraordinarily expensive and slow to work your way through that entire field. In terms of sandbox, I can tell you that Munich Re has been involved on every level of trying to develop a sandbox approach. So there's a lot of support for it. I'm going to do two things real quick, and I don't want to monopolize the mic. One is I want to make it clear. Not today, not ever, are you going to see us here at Munich Re throwing stones at regulators. And the reality is we have partners who are trying to get programs approved throughout the country, working with many great regulators throughout the 50 states. So that's not what I'm here to do. But the other thing is I do want to talk about maybe some specifics, without talking too much about our partners, but just generally some specific examples, the kinds of things that happen. So if you have an insurance product that is purely internet-based, that's your value proposition, and everything you can do is purely on your phone. Right now, you can buy things from Amazon, you can immediately find exactly what you want, have it shipped, pick it, never get off your phone. Millennials are used to doing it, that's how they live. But if I have a regulation that says that's great, but I have to make sure that I have the ability to provide all notices by U.S. mail, and I have to have the ability to receive faxes and do business with paper, well, it doesn't seem like a large burden, but it's completely at odds with the entire business model, its culture, its branding. We don't have big offices and big Xerox machines and a staff of people to receive a bunch of faxes from across the country. So that would be one example of the kind of thing. Another would be, there's been some talk about micro-insurance, on-demand insurance, insurance for limited periods. Well, that's difficult if there is a regulation that requires that I can't do a cancellation without a year. I can't cancel within a year or do a non-renewal within a year or within 3 years. But at the same time, we have consumers who are seeking the ability to turn their insurance off, turn it back on, turn it off, and turn it back on. So that's we're trying to meet the consumer's need to do that, and then make it work with the regulations. And another one just broadly, and we'll see this, but as we see, well, the sharing economy presents lots of unique issues, but also think about autonomous vehicles. We now have vehicles, if not tomorrow, today, where during certain periods of time they're being driven autonomously by a computer owned by a company that manufactures cars. Other times they're being driven by individuals. Okay, much like the rideshare problem. Well, wait a minute, are you a delivery driver or are you an individual driver? Well, you got to fit into one bucket or the other. That's the way the regs work. Well, in the case of autonomous vehicles, is this a product liability claim? Because I'm a driver, I have no control over this car whatsoever. But wait a minute, now I am a driver. Now I do have control. So yeah, the technology has to get there. We have to have tech in place that can make those delineations. But we also then need to figure out how to allow insurance to work to accommodate these hybrids that are happening. One final example, and then I'll pass the mic. Think about, and I know this, I don't want to, there's a big data panel. And I want to say that's the most important panel of all here today, in my opinion, just because it permeates everything that's happening. If I'm going to go to market with a product that's based on some whiz-bang high-tech telematics that's going to be able to measure all kinds of new increments, and I want to go to market with that, and I've got to go to 50 states who all want to do form and rate filings and want to have an understanding of each single possible component of that, looking at it from 50 different perspectives. I have concerns about confidentiality because those algorithms may be our partner's entire value proposition. Turning that over, and then having it viewed and poked and prodded from 50 different angles before we can ever figure out, does it really serve consumers? Does it really work for them? We may never know. So these are some concrete areas, I think, where it's not so much that regulators are unreasonable. And actually, let me take one moment to say this. In our experience, which is fairly new, we're a new organization, we think there's a lot of good faith amongst regulators. I see good faith desire amongst most of the regulators to accommodate these things. But they're used to, they have certain boxes they've got to check. They've got certain ways they've got to view things. They want to see history, and some of these things have no precedent. So when you put it all together, I think that there's a place for the regulators and the innovators to come together and really figure out how do we serve consumers. And the advantage, I'll finish up with saying the advantage of the sandbox is that, will there be some mistakes? Yeah, there will be. There'll be learning that goes on, but better for it to happen on a small scale than to have it happen on a large scale, and better for it to happen on a small scale than for the changes to never happen.
Joe, Matt, from your all's perspective, and really kind of the back end of just improving the normal way insurance is done, what do you see with the value of a sandbox, or is one needed?
First of all, just to echo the comments that we just heard, I definitely don't think that there needs to be any sort of a contentious relationship between insurtechs and regulators. Now, for our technology that we're developing, as I mentioned before, we're not developing a disruptive technology, and therefore, by not making as many waves, there aren't quite as many regulatory implications that come into our business model that you might see from others. Uber being discussed, things like that that are really shaking up the way that things have always been done. But one of the main reasons that I think, kind of keeping it high level, one of the main reasons that I don't think the insurance industry and Insurtech will have some of the similar problems with regulators that other industries might have is that there's a shared mentality there. At the end of the day, regulators are in the business of incentivizing good behavior and punishing bad behavior. That's insurance. When you're talking about saying, we'll reduce your premiums if you're able to implement the following safety policies, that's an incentive that's being offered for good behavior. And we're going to say, okay, you've been in 6 accidents in the last month, we're going to increase your premiums, and that's a punishment for bad behavior. So it's not sort of this night and day, apples and oranges thing where the insurance industry just can't possibly relate to what these regulators are hoping to accomplish. There is a shared mentality there.
I think one of the interesting things is that we're going to see through the integration of technology within the insurance space will be transparency, and the transparency that might have been a lot more challenging to present and to understand in the past. So from a regulation standpoint, I hope that that eases some of the tension perhaps that might have previously been there where it's a guessing game as to whether or not things are covered, or are we communicating effectively through our distribution channels to the end users what sorts of risks they may have. So I look at this as a tremendous positive, and I think that the regulation environment will be very favorable in this capacity that we speak of, specifically at Swivyl certainly some challenges when it comes to the Ubers and autonomous vehicles of the world.
So Kyler, since you are just new to the insurance side of the industry and really from the tech side, have you heard Dennis use some of his examples of some of the arcane ways of which our statutes and regulations currently exist? What have you seen with regard to this whole issue of how regulation may be an impediment to really trying to accomplish something in a collaborative manner?
I guess I would say I haven't seen anything so far that has hindered us in what we're doing, with the exception of I think that regulation shouldn't only be seen as something that doesn't hinder, and protect, but also that can empower. So from our standpoint, we haven't bumped up against any laws that we wish weren't there because, we're not an insurance carrier. But what we do bump up against is the mess of different systems out there and the lack of standards and the lack of cooperation between the different companies. So we would love to, in our business, we process south of 1 million documents a year get uploaded to our systems, and we have to have people go in and review those documents. And so we're using some of the AI tools to help us automate some of those processes. But that's sort of the Rube Goldberg approach to all of this, right? So like what would be better for us is if we could go to carriers directly and pull structured data instead of getting a scanned PDF that we have to OCR and then, an 8 is a 3 and all of these challenges that we come up against. And so I guess what I would like to see from a regulatory standpoint is fostering standards and cooperation in the industry.
So, Dennis, I'll go back to you in the context of dealing with the various regulators, and to me, every department is different. And the departments differ depending upon who may be in that office at the time, how their staff may change, who you may get when you do a rate filing. You could have a rate filing be done and you have 4 products and you get 4 rate filers and you get 4 different answers. Just a lot of variation. And even with the states that you have cooperation, I think you heard Tony mention earlier in the legislative session about, well, if the department sees and you've got this insurance code and it says X, Y, Z, they will say, and rightfully so, my hands are tied. They may want to help you all the world. They may be very encouraging that they want to see you innovate, but they're still dealing with what I call antiquated law. So when we come back to, how can we think out of the box and come with a different dynamic? What dynamic would you like to see? How could we find a way to solve some of these problems in a way that, and I agree, it's a collaborative approach to frankly better the customer's experience, and whether it's providing better insurance, cheaper insurance, more efficient insurance, and there's lots of gaps in this world we all live in, but we're insurance professional. For the common person or even common commercial business person, this is kind of foreign. So, how can we make things better?
Greg, I wish I had an easy answer. I would love to share that. It's not that easy. I think it's important to recognize, even working so closely with innovators, that regulation is important. It's important to protect the public. And I guess one point, and I think it was made early, none of our partners, none of the opportunities we look at are have any concerns about solvency requirements, right? Innovators are not trying to push solvency issues. That's not where the fights lie, the challenges lie. Everybody wants to ensure solvency. So I think it really, part of it's attitudinal. Do regulators see these opportunities as fly-by-nights? Do they see them as unnecessary? Do they see them as nothing new under the sun? Part of it's educational, trying to educate as to the kinds of things that are happening now and that are on the horizon. And part of it's just having some degree of flexibility. You know what? It's difficult to go into a state, have a product that's been approved in a dozen other states, and have that 13th state say,
Well, we've never seen this product before. What's the history on it? We're going to need some comps. Well, we don't have any comps. All right, well, you're going to have to get some. We'd like 3 years of comps. Okay, well, that's going to take 3 years of us doing business, not in your state, not providing this product to your consumers who are going to be deprived of that product that might be valuable to them and that pricing that might be favorable to them. So flexibility and an open dialogue. You know, I think one other point too, having advocacy, having a group that can speak for the innovators. Who speaks for these innovators? Who can posture these issues? I think making sure that the industry, the innovators in the industry have a voice and have a clear voice, I think is important. And elevating that voice is important as well.
So, Joe, Matt, from your perspective, you've talked about you've not really had to be impacted by regulation, but, you know, being entrepreneurial, seeing the opportunities to create a better system. What ways do you think, from your insurance background, of ways that we can make the system better?
Yeah, I think the continuing challenge is going to be trying to create somewhat of a standardized approach to this, because as technology is going to make the distribution and the access to different data points very, very seamless for consumers and for those trying to provide those, you have challenges geographically that impact that as well. And so I totally agree that having flexibility around kind of the collaborative environment where new products can be represented relatively in a streamlined manner, and also to welcome new entrants as well, and not push those away. So I haven't seen a whole lot of that yet from my perspective, but I think we're just going to see a big shift in that, especially as you have the lemonades in the world that are trying to go direct to consumer. That changes the game significantly. And so I think we've yet to see some of the challenges that we're going to face relative to some of these issues.
Kyler, tech side, from the software, the back end, from the AI, I mean, all of that, typically from the insurance regulator's point of view, they see it problematic. In the context, I think that you heard the earlier panel, regulators think that IT can turn things on a dime, and simple things of whether it's generating a different variation in a computer system, that's not a problem. So from your perspective, what do you see that can be done to, frankly, further educate of the tech space of what the world you all live in that would actually interface in a regulated space in a way in which they wouldn't necessarily be fearful, or they would appreciate the time and attention it takes to actually change the system?
So I think, as someone said earlier, is like communication between the two groups. In Indiana, we've got fantastic, there's a burgeoning tech space in Indiana, and because of people like Scott Dorsey and ExactTarget and John Wexler and Launch Fishers and Mike Langelier and TechPoint, there is a thriving community that I don't think people are really too aware of in Indiana, and I think working with them, talking with them, asking what are the issues is one step in that direction. Let me also say a little bit about my experience. Before I was with myCOI, I was working with Purdue University with their research foundation, and I was an advisor to startup businesses, and we were sort of the gatekeepers of people that wanted to license Purdue intellectual property to start a business. So it was a lot of professors that were doing research and they wanted to create a business out of it, but they've been professors all their lives, and so they don't know anything about business. And so they would come through us, and we would help coach them and advise them on the market and just how to get a business off the ground, and then ultimately be the gatekeepers for them licensing that IP from the university. So all that to say is I've had a front seat to innovation over the past 3 or 4 years. And one thing you can say is that you cannot predict it, you cannot anticipate it. Like the ways that people, as soon as Bitcoin came out and that white paper was out there, not that long after that, they came up with smart contracts on the blockchain. And that is just a revolutionary use of the technology that no one could have anticipated. And we're just starting to learn the potential applications of that, right? It's almost like the researchers that are inventing the laser, but they have no idea of all the different use cases that that laser will impact. And so from a regulatory standpoint, you know, we obviously know we can't anticipate, but, you know, rule number one is almost like the Hippocratic Oath, like do no harm, right? You know, don't get in the way first. Wait, maybe be okay waiting and watching to see what the problem is, you know? So maybe it's not the Chicago fire, maybe it's just the Schaumburg fire, like one block of Schaumburg that's on fire, and then at that point you do something about it. But I would say, like, Indiana, it's an amazing tech community. They're really exploding. Like, I would love to see more structured communication between the regulators and that group of people.
So now I'll throw out a different question. Dennis, you mentioned the issues of autonomous vehicles and the shifting profile as to whether it was personal lines, commercial, the whole fluidity dynamic. I see that really as being disruptive to the insurance industry. And one of the things that we had hoped, we're going to have the auto panel discussion. And so I had the privilege of going up and talking to the OEMs on insurance. And it was very good for me because I usually hang around insurance guys. And now I'm talking to people that are managing the risk, the warranty exposure of all of the major OEMs and their basically first and second tier suppliers. And so when I look at disruption and I look at the autonomous vehicle, I was up early this morning checking on the weather, and I got to see that General Motors just announced that they've got an autonomous vehicle they've got in test that has no steering wheel, there is no driver. So when I look at disruption, I'm thinking that it's maybe not just the way we look at it as insurance and the insurance industry. I look at it from the point of view of you have the auto industry and you have a total different dynamic and the opportunities to disrupt, just like we talked about blockchain and cryptocurrency, that it's going to be a total different way of thinking. And frankly, I wonder whether the auto industry will actually try to do the risk management and get rid of a lot of personalized auto carriers, because they may be in control of all the data. They may actually have the risk. They can find a way to have a total different business model. And so I would be interested in the thought process of what's the concern of big disruption.
So let me first start by, a lot of times people will look at the industry and ask, are we going to see disruption? Or are we going to see the existing value chain have greater efficiencies or improvements in its delivery? I think the answer is both. I don't think Uber is sort of a cautionary tale in so many ways. I'm not waiting for the Uber to come in and take over your traditional personal lines coverage. It's not what I see. But when you talk about disruptions, how about where you can put telematics into your home and suddenly you can monitor every single possible pipe, every electrical outlet. You can prevent fires before they happen. You can prevent floods before they happen. Now you have autonomous vehicles. We can prevent crashes by, let's just say, in the not too distant future, cut crashes by 90%. The insurance industry is based on protecting people from risk. What happens when you eliminate risk? What impact would that have on them? So I think that kind of big picture disruption is real. But in terms of Insurtech startups, what we're dealing with now, what we're dealing with regulators, what we're dealing with the sandbox, I don't see most of that as disruptive. I see it as taking parts of the value chain and making it better, making it more efficient, making it more user-friendly. If I can, instead of having someone who's in an accident have to wait 4 days for someone to come in the van and take a look and adjust the claim, and I can have a drone there all of a sudden within 25 minutes, well, that's a whole different animal. That's cheaper, more efficient, those kind of changes.
Yeah, I totally agree. I think a lot of what we know about customer service, regardless of the industry involved, is all about managing expectations. we always want to make sure that we're under-promising and over-delivering, but the reality of the situation is that consumer preferences and consumer expectations have changed dramatically in the last few years. Just in 2017, the World Insurance Report was released, and one of the authors of this report, I saw an interview that he sat down for, and one of his big takeaways with the 8,000 plus people that he was a part of interviewing was that people are all now looking for personalized service, not a one-size-fits-all solution to whatever their needs are. And that really stuck with me, that resonated with me, because I was thinking about my own consumer practices. I thought, well, when I want to listen to music, I can just open the Pandora Spotify app and I've got a personalized playlist that plays music exactly how I want it. Amazon suggests products based on my previous purchasing history. Netflix suggests movies. You know, the list goes on and on and on of the way that people are now expecting those sorts of experiences. Insurance has never worked that way in the past. It's all been about, well, you are a 35-year-old white male who's married and you live in Indianapolis. Therefore, you are this level of risk as a driver. Well, those things are starting to change, and we are starting to see some things that aren't necessarily disruptive technologies, but things that are really helping everybody involved in the insurance industry to collect and communicate better data. One of the best examples of that, I think, Progressive, State Farm, and at least one more, they all have the plug-in now. That it isn't just based on people like you, it's based specifically on your driving habits. How hard you hit the brakes, how fast you accelerate, what time of day are you spending most of your time driving, how many hours a day are you driving. These are all very personalized things that come into play. So when we talk about Insurtech, I think the tendency is always to say, well, what is it? Is it supportive or is it disruptive? And I think Dennis is right on the money. It's both. There are going to be technologies that say, we want to make personal lines insurance brokers obsolete. We're going to handle all of that through an app. But then there are also technologies that say, we just want to make sure that everybody involved in this process has better, more accurate information available to them 24 hours a day. So there is a really broad spectrum at play there.
So in doing a little bit of research to prepare for this panel so I could sound intelligent to a group of people in insurance, but I don't have much of a background in that, I made a list of some of the things that are happening in the industry related to hot tech. So, and starting out actually with myCOI, so I thought that might be helpful. Mind if I share that?
Please.
So what we're doing right now is, I mentioned those 1 million documents coming in the door. The first step in the process is understanding, is this an Accord 25, or is this a CG 2010 that's coming into us? That is in the wheelhouse of machine learning. So we're actually right now building an AI algorithm that will, right now it has like a 97% accuracy at recognizing what those forms are, and then that helps us along the process. The second piece that we're doing with the exact same technology is we're basically doing lease abstraction. So when we get in these leases and someone has to go through and pick apart the insurance requirements from it, we translate, if it's an image, we get all the text out of it, and then you can actually, let me think of a good way of saying this. The words in the document can actually be given numeric values that have meaning. So you can actually do math on the word. So bear with me for 1 second, I'll give you a crazy example of this. So if you take the word king and you get the numeric representation of that and you subtract queen from it, and then you take the word boy and you subtract the difference, you end up with the word girl, which is just crazy. So basically all that to say is words can have numeric meanings, and because of that, these machine learning algorithms can actually operate on words, can do math on words. And what that means for us is that we can comb through that whole insurance document, and even though the insurance section never uses the same words twice, we can actually know that this has a score that means it's relevant to the particular piece of data that's trying to be extracted. So I hope I didn't go way too deep there, I think I did. But, so other things that are happening is basically the cutting edge of machine learning right now is pattern recognition. That is what these things called neural networks are getting amazingly good at. They're getting so good at it that they're better than people. And so how can that apply in the insurance industry? A couple different ways. One is risk determination. So having statisticians go in and try to determine risk and figure out what are the right input parameters to that risk equation, those things are going away. Like statisticians are far being vested by these machine learning algorithms, pattern recognition, something that can say, you predict for me whether or not a claim will be submitted for this person, or whether this person is going to have a car accident. Another one is customer service chatbots. So the AI is getting skilled at interacting with people. It's still a little bit rough, but basically like pulling out, creating efficiencies by augmenting your customer service departments. And the chatbots are helping with that. The other one is fraudulent claims. So I read that AIG pays out $130 million a day in claims, and like 45% of those are suspected to be fraudulent, which is just a crazy statistic. Well, the AI, you can train AI algorithms on how to recognize fraudulent transactions, and they actually get better at it than people. So they learn subtle nuances that maybe we would not even see ourselves, but they can pick up on that. Another crazy use case that's out there is for if you submit an auto claim, people are taking pictures of that damaged car, and then the AI is predicting that's about $1,200 worth of damage. So you skip the 3 auto shops to get 3 quotes. The AI is predicting the loss and the repair costs with astounding accuracy. So just a few examples to hopefully stretch your mind on what the potential of this is.
That was excellent. With that, I think I really appreciate your all's participation today. That'll be a great segue into the discussion on big data.
Yeah, there you go.
Thank you all very much.
Thank you.